if you have been following the news recently, you might have seen that the US dollar has jumped to a 20-year high, while many other major currencies aren't doing so well, like the China's yuan, which have dropped to record low against the dollar, or the pound, which have plunged to all-time low, and the euro has fallen to 20-year low. This chart appeared on Wall Street Bets, where it showed that the US dollar is going to the moon, while all the currencies are crashing hard, like our portfolio. This is bad because it's causing a lot of troubles worldwide, like financial and economic instability, potentially causing emerging countries like El Salvador, Ghana, and Egypt to default on their debts. And just in case you think this doesn't concern you, actually it does, because a rising US dollar may be bad for your stocks. In this video, I will explain what is going on and how will it affect you. But as usual, before I start, I would greatly appreciate it if you can help to tap the like button and subscribe to stay updated. In return, I will show you a cute deer. Alright, let's start right now. To understand what is going on, we need to first understand why is the US dollar going to the moon these past few months. Before that, let me show you something interesting. This is a chart of the US dollar currency index, or DXY, where it tracks the strength of the US dollar against 7 other currencies like the euro, Japanese yen, British pound, and so on. What you can see is that the US dollar index has been steadily going up this year, giving a super high 17% return. The last time it was this high was in 2000, where the dot-com bubble popped and a recession happened. Morgan Stanley found that whenever the US dollar rises too fast, bad stuff will usually happen, like the Mexican debt crisis, Russian default, housing bubble peak, great financial crisis, and so on. So, what caused the US dollar to go up fast and furious? It's because of this guy. Just kidding, not this guy. It's the place where this guy works, at the Central Bank of America, or better known as Federal Reserve. Here's what happened. So, remember the whole thing about inflation going up, and the Fed told everyone that it's just transitory inflation and the inflation will go back down soon? Guess what? They were wrong. Not only did the inflation not go back down, it started going up to 40-year high. The Fed realized their mistake and started raising interest rates in order to fight inflation. Since the start of this year, interest rate has gone from almost 0% to 3.25% now. And by next year, it might even reach 5%. When interest rates go up, the cost of borrowing will go up, which makes people spend less money and eventually causes inflation to go back down. However, at the same time, rising interest rates makes bonds less attractive, causing bond prices to fall and bond yields to go up. Right now, the 2-year treasury yield has gone up to 4.2%, which is actually super high. Then, of course, some of you be like, "Che, where got high? My Tesla and Bitcoin can easily give 500%. Yes, but that was last year. In 2022, can Tesla and Bitcoin still give this kind of returns or not? Year to date, Tesla has dropped by 33%, Bitcoin down 60%. Even safe stuff like the S&P 500 has already dropped by 25%. And some people still think that it could fall further. This caused many investors to be paper handlers and start selling their weaker performing assets like stocks, cryptos, and currency, and just park them in the US dollar. As a result, the US dollar went up while all the currencies started crashing down. Meanwhile, the Fed be like, "Not my problem." Here's a question. Why US dollars? Why not other currencies like the China yuan? China is the second largest economy in the world, but they have some property crisis going on, and their zero COVID policy is crippling their economy. Japanese yen? Japan is keeping their rates low, which means that their rates won't be as attractive as the US dollars. British pound? The UK economy is crashing, and the government is planning to do unlimited QE to fix the situation. And I know that unlimited QE is bad, especially right now when the cost of borrowing is at an all-time high. As if that's not enough, they also proposed a tax cut for the rich, but quickly U-turned when they realized that it was a bad idea. What about euro then? Russia is cutting gas supplies to Europe every now and then, and gas prices will go up even more when winter comes. In short, every other major currency is having trouble, except for America. That's why everyone is moving their money over to the US dollar, which is a safe haven now, while all the other currencies are falling. Quick pause, let me share a quick message from this video's sponsor, Weibo. This month, Weibo has further improved their sign-up bonus to $130 worth of free Tesla shares and a free Grab voucher worth $10. All you'll need to do is deposit at least 2000 SGD into Weibo, make one buy trade on either US stocks or US ETFs, make another buy trade on US option, while maintaining a 2000 SGD net account value for that 30 days, and you will receive all your rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. So how will this affect us? First, it will cause many developing countries to default. Remember a few months ago when Sri Lanka defaulted on their debt, which caused everyone to be unhappy and stormed the presidential mansion? Then the president had to resign and run away to Singapore. Many other nations are about to face this issue. Not the storming presidential mansion and running to Singapore part. I mean the defaulting on that part. Developing countries like El Salvador, Ghana, Tunisia, Pakistan, Egypt have very high government debts. And if the US dollar going up against their currency, they will have trouble repaying the debts and may just default. But of course, you'll be like, "Aiya, I'm also not staying in those countries. I don't really care about them lah." Okay then, let me share what we really care about, our stock portfolio. What will happen to our stocks when the US dollar goes up? Bad news, it's bad for US companies. Here's why. Many US companies have overseas business rights. For example, Apple sells iPhone in Thailand. An iPhone 14 Pro Max costs a kidney. I mean 44,900 Thai bahts, which earlier this year, it would be worth 1,247 US dollars. But now, because Thai baht has weakened against US dollar, the phone will only be worth 1,167 US dollars. Basically, Apple is earning less 15% just because the US dollar has gone up. We can already see this happening. In July, Microsoft reported their slowest revenue growth, with the biggest challenge being foreign exchange rates. That caused Microsoft to reduce revenue by $595 million. Johnson & Johnson has also forecasted their earnings to drop due to rising USD. And with the earnings season coming soon, we will see many other US companies have lower earnings too, like Apple, Facebook, Google, which all earn 40 to 50% of their revenue internationally. But historically, how much does rising US dollar affect earnings? Here's what GMO found. This chart looks super complicated, but it's actually quite easy to understand. The blue bar down there means that USD is rising. Whenever that happens, earnings tend to go down. The dark green bar up there means that USD is going down. When that happens, earnings tend to go up. If USD appreciates, earnings will go down by 7% on average. But if USD depreciates, earnings will go up by 7% on average. So what does it mean for the stock market then? Goldman Sachs found that in 2022, shares of companies that earn most of their revenue in the US have outperformed companies which earn a bulk of their revenue from overseas. So, sell ah! Just kidding. There are a whole bunch of factors which can cause the market to go up and down, like supply and demand, monetary policy, natural disasters, and so on. Here, we can see that in grey areas, the US dollar has an inverse correlation with the market. But for non-grey areas, the market moves in the same direction as the US dollar. So it's not just USD up, market down, USD down, market up. Not so simple ah. Here are my thoughts. While rising US dollar may be bad for companies, it's actually super hard to predict how will the market move. While some people feel that the market may crash further due to rising interest rates, it's also possible that the market starts going back up if inflation peaks or the war stops or many other unexpected events. And as always, I suck at timing the market, so I prefer to just dollar cost average. Market down, I buy the dip. Market dips more, I buy the DPT dip. Because I know that over the long term, when all this nonsense is over, the market will eventually go back up because stonks. Anyway, that's all for this video. Hopefully, you find it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.